What's up, guys? It's October 30th, 2024. Finally starting to get some volatility back. The market was kind of dry these last 2 days. Sideways, had a rally, sideways. Today we had a rally, sideways, and then a sell-off. Sell-off was pretty sideways too, but there were some tradable legs. The daily chart, 45-minute. It looks like the market's gapping down. Let's see. Gap down with continuation. That's the overnight session. Anyways, daily chart, we went leg one, pull back. Oh, so hold on. Leg one, pull back. Leg one, pull back. Kind of a wedge top, bear flag, inside bars, and then we sold off. For the leg two to be complete, it has to go to one tick below. Right now, we're still trading within this bar's range. Bulls tried to rally above the 23rd high, but it failed to reverse lower. So yeah, we've been stuck in the 23rd range. The 23rd was a really large day. I remember, yeah, this is the 23rd. We had a sell, and now we've just been stuck within that range. Kind of, we could say that's the high. Could say the overnight session. Start the bear leg. We have a gap down with continuation, bars 1, 2, and 3. This can be a form of 3 legs lower. Leg one, leg one, pull back, leg two, small pullback, leg three. And then we ask ourselves, okay, is it trending or is it range bound? This could start the trend, yeah, but then we see bar 4, and then we look back to the left, and bar 3 is testing yesterday's bar 3, bar 4 high, and then we rally. It puts us right back into yesterday's bull channel right here. 4, 5, 6, 7, 8. It's a strong bull micro channel, and with this many bars, we should expect some sort of pullback eventually. We do get that here with 17 and 21. Leg one, pullback, leg two, wedge bottom testing the breakout point. Second legs don't have to be symmetrical. So what does that mean? It just has to go one tick above the prior swing high for it to be completed. So give me 2 seconds here. So if that's the swing high, bar 15, we're looking for one tick above that. We get to after this wedge bottom, 22. Rallies, we have another 3-bar micro channel, 22, 23, 24. Quick pullback, 25. I bought that low. Rallied, I got out on 30th. On bar 30. So leg one, pullback, leg two, pullback, leg three, wedge top. This price structure here completes the leg two for this price structure. So now you can say both price structures are complete, and we actually have an overall wedge top here. Always in direction. We're in a trading range, so it's sell the upper third, buy the bottom half, or excuse me, bottom third. And you can see that worked for this part of the day. Once this price structure was complete, leg one, pullback, leg two, bear started to sell off. Bar 29 is a high one. A high one usually has more sellers in it, above it, excuse me. And we see that here. Pull back, leg one, leg two, pull back into the EMA. Bulls try and go for a rally using the higher time frame as support. But there's more selling pressure with 47, 48, 49, 50. Bears backing down, testing the high of bar 3. And then bulls get their 2-legged rally. Leg one, pull back, leg two. Again, another wedge top into the EMA. Bars 47, 48, 49, 50. They're strong enough to get its own second leg with multiple gaps open here. Give me 2 seconds, guys. So with that being said, you know my favorite trade is looking for a leg two. I was short around here, but I got out on 64, called it a day, and then it sold off. So kind of sucks. That was the trade, I think, 57 to one tick below 51. So you can get short here. Maybe you want to wait for a low two. Bar 60 is a low two. You short here, sit through a shallow pullback. You trade it to one tick below bar 51, and that gets filled on 68. two-legged pullback, leg 1, pullback leg 2. You short the high of this, trade it to one tick below 68. That's filled here. Shallow pullback. 77 is a low 2, low 1, low 2. Scalp it. Very deep pullback. I really don't think you should trade after 72 if you're not profitable on the day. These kind of bars can start happening and you'll get trapped in either ball profits. That would really suck. That's happened to me a few times, so I just kind of call it around 72. It's kind of hard to get used to, but it's a good practice. So where are the trades? Where are the rallies at? So sell off, you can go for 1-to-1 with bar 1 and 2. I didn't shake that, but very quick profits here. Met with 3. Bulls, bears are taking support. Bears are taking profits as we test these 2 bars. We get another, so we vacuum down and then vacuum higher, testing support and testing resistance. We have a big down, big up. When we have a big down, big up, expect a range, and we had that for a few hours. It was really today was really more. Today was a range day. Like, look, range here. That's being a low. And as soon as that gets put in, we go sideways here. So there really wasn't too many. Like, it wasn't really that good of a breakout because it was just sideways. It was a sideways day. We've been ranging for a few days. Look at the daily chart. 1, 2, 3, 4, 5. 1, 2, 3, 4. 4 range bars, 4 dojis, and today we have a trend bar. It has tails though, so it's not the best. And then yeah, so we finally had that trend day, and if maybe we recognize this fast enough, and then we go for 1-to-1 of this. Not necessarily my type of trade, but it is a trade that would have led to profitability. That's met with 30. 30 is a high one, so think about that. This is a strong micro channel. It should get some sort of test above, so you could wait for this. This was the trade I took. Here, I took a trade here and got cut up. I bought the low here and got that break even. Bought here, lost a few points. Bought more again, made it back. You can see 1-to-1 wasn't met, and why wasn't it met? Well, we were trading at yesterday's swing high. We're in a range, and when we're in the upper third of a range, it's sell. Here's 31. Here's 29. A high one at the high of a range is a good sell. There's usually more sellers above. And then we have 30, 31, 32, 33, 34 being a bear micro channel that should get its own second leg. And that second leg is completed really quick with 37, but that ends up being a pullback. Then we get leg 1, pullback leg 2, pullback leg 3. After this red bottom, we could say it's range bound. The market broke out. 51 starts the channel phase. So leg 1, deep pullback. Leg 2, pullback. Leg 3, pullback. Leg 4. It's the restart of a market cycle when we break out of a range. So where are we here? We want to go 1-to-1 here, but at the high of this pullback. That's met. What's 1.5R? That's met. That's great. Another 4-bar micro channel. If you were in this, you know, I was short around. I shorted 47. Excuse me. I shorted 40. I shorted 47, and I got out around 48's low. And it was a little frustrating to see it keep going. But then let's think, what are the probabilities? The more bars we have in one direction, the higher probability there is for a pullback. So don't be worried. Just think about it. Like, if you're at 5-6 bars, there's a higher chance for a pullback than a continuation. That pullback doesn't mean a full-on reversal. It just means we're going to pull back. And that pullback came about 20 minutes after. So 49, 50, or excuse me, 50, 51 started the pullback. We get a measurement of this leg, put it here. And that was met with, this was my ultimate target, but I got out around here. That was met with bar 79. That was a good sell. That's a good trade right there. If that, maybe you don't want to hold for that big of a move, that makes sense. So you could go measure bar 60, better to the high of 59 and 60. put that here, and look, that was met on 68 and reversed. So as we're scalping, as we're trading, we see this as a new trade. We put that at the high of the two-legged pullback, and that's met here. And then you would have to start scalping. I think it's best to stop trading at the bar 72. So today I offered a lot of trades. Today was my first profitable day of the week, and I was trading live again, so that was kind of nice to go back live and actually end green. Let's go over the gaps. I think I'm going to leave that up for the moment. Gap down with continuation, gap here, reversal, bull's got a gap. So now we had a big down, big up. We're thinking range bound price action. Always in a trending environment is 10 bars above the EMA. Always in a trading range environment is a little bit different from a trending environment. Always in trending environment. Excuse me. Let me re-say all that what I just said. Always in direction is different in a range versus a trend. And a trend we went 10 bars below the EMA. In a range bound environment, always in could be around down here because we're testing support. Always in short is around up here. It's counterintuitive to breakout traders, so try to stay away from those and wait for the breakouts. Sometimes I get caught up, but every day we get a little bit better, and over time we will become good traders. A lot of gaps. Keep that in mind if you're trying to buy. I did buy these bars thinking we were going to go up. It was thinking we were going to be range bound for the day, but before even 47 closed, I just reversed my position, made it back. So here are the gaps. You can see when we go range. So this gap stays open, and then we go range bound, and bar 55, 56, 57 gaps close. So you can tell bears have a little more selling pressure. The gap on the day. Not a bad day. Finally got some range. There's some more tradable legs. Hope you guys are profitable. Hope you guys are learning. I appreciate the comments. Hit the follow button. Let me know how you guys are doing. If you learned something, share the show. I'll talk to you guys tomorrow. Have a good one. Thank you. Bye.